Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today, I'm really pleased that we have Pro Market Advisors with us today, Rick Swope and Shawn Howell, and they'll both be talking about trends versus channels, choosing the right indicator. Whether you're bullish or bearish on the dollar, it's always nice to know where the trends are. So please, you're going to really enjoy this presentation by Pro Market Advisors, as both Rick and Shawn have been in the market for many years, and they specialize in technical analysis. Not only that, but risk management. And it's so important to understand risk management, and they really stress that as one of their key points, along with technical analysis. So they'll give you some examples. They'll show you a couple things that are going on in the markets. We'll go through some slides. Without further ado, I want to introduce Rick Swope and Shawn Howell, Pro Market Advisors. I really appreciate both of you guys for joining us today here at the ISE.
You bet, Steve. Thank you so much. This is Rick Swope with Pro Market Advisors, and Shawn is on the line with me, and he'll be jumping in here in just a moment. But we're going to go back and forth a little bit, and we appreciate everybody joining us for this broadcast today. Steve, I appreciate the fact that you pointed out right in the opening about how important risk management is, because the fact of the matter is it doesn't make any difference what strategy you ultimately decide on, or what currency, or what you decide to trade. The fact is that the most important part of your participation in the market is making sure that you have identified risks properly and manage those risks. Now notice I didn't say avoided the risk. It's not practical or even possible to do that. But the strategies that we employ, the technical analysis, the technical indicators, kind of stuff that we're going to be talking about today, first and foremost, is designed to help us manage risk, and then secondarily, it's designed to help us identify the trading opportunities and manage the trade. Let me tell you what it's not designed to do, and that is predict the future. There are a lot of different strategies, there are a lot of different approaches to the market. But at various times they're going to work, at various times they won't. The idea here is to have a logical, disciplined approach to the market that puts the odds in your favor, and we can in fact do that. So, you know, as you join in on the series of ICE webinars, I know that there are a lot of great speakers that Steve works with, and people that come from the markets and from different angles. I want to encourage you to open up your minds and thoughts to some of the different strategies, but ultimately look for the ones that are going to meet your objectives the best. I just want to let you know this is just kind of a obligatory slide to let you know that we're going to be talking about various markets. We're not going to specifically make any buy or sell recommendations today, and everything that we talk about should be used for educational purposes. I also want to point out there's a great publication available to you called The Characteristics and Risks of Standardized Options. Whoever your broker might be, I want to encourage you to get your hands on a copy of that and take a look at that. It's got some great information, because what we're ultimately going to be talking about today is applying these strategies toward the ICE FX options, which we're big fans of ourselves, because it lets us trade into the currency pairs just as easily as we're trading options. That's why we like those, and we're going to talk about that. Steve, do you want me to toss it back to you, or do you want to come back to this toward the end? We can hit this right now, just kind of an introduction. It might be a good opening. Your call on that.
Yeah, I mean, we can just hit it really quickly. You know, we have lots of symbols here. As you can see, the most important part is that knowing your symbols to type them in to your equity options broker. You can trade dollar-based or dollar quote. That's up to you. You want to understand that if it's dollar-based, then you're bullish. Well, you'd be looking at calls. And if it's dollar quote, it'd be the reverse. So whether it's AUX or AUM, that's up to you, or BPX or GBP. So we have some that are both, and the reason we added those new ones, the ones on the right, they are, for those of you that are trading in the spot market, you'd be a lot more familiar with the Australian dollar relative to the U.S. dollar compared to the U.S. over the Australian. So we just did an inverse. We had the dollar-based for a couple of years, and we just added these about 12 or 13 months ago. And you should, again, check out your equity options broker. They'll have all these symbols. You can trade them as spreads or European-style exercise. And you should always check out our website, www.fxoptions.com. Rick, thanks a lot.
You bet. And one thing that I do want to add to that also is these symbols right here, depending on who your broker is, those symbols may be listed as an index type symbol, which would mean that to get a quote, you would put a dollar sign in front of that. So it depends on your broker. But if you just type in, say, AUX, for example, and you don't get a quote, don't think that they don't have the ICE FX options available to you. It probably means that the symbology is just slightly different. So if you can't figure it out, be sure to contact your broker, because these will be available to you. They're traded in the same way that you trade options. So keep an eye out for them. I'll show you how we look at them. We're actually going to look at some live charts as we get toward the latter part of the presentation today. So you'll see what these look like in action. Anyways, of course, it's the same thing there, but here's what I want to start off with. You know, in taking a look at the trends versus channels, the first thing we have to do is understand what's going on in the story behind the chart. Now, I know a number of you that are on this call are probably a little bit more advanced, but I got to tell you, it's a good practice every once in a while to bring yourself back to the basics. Now, I'm going to start with some of the basics of candles, but not spend a whole lot of time on this. But we want to kind of set the foundation because we have folks coming in from all skill levels right here. So the primary chart that we like to use in finding out the story, and what I mean by the story is who's in control. Is it the buyers or the sellers? You know, we can go right to the FX options, but if we don't understand what's going on from a technical perspective in the underlying currency pair, going in and look at the option spread or the delta or any of the characteristics of the options themselves is kind of really putting the cart before the horse, to use an old beat-up analogy, but it's true. So we have to start with the story and understand what the prevailing sentiment is in the currency pair that we're interested in. Whether it's equities, ETFs, or currency pairs as we're talking about today, our favorite approach to doing this is with the candle charts. The foundation on this is you get 4 data points on every candle, whether you're looking at a daily, a monthly, a weekly, or even an intraday, 10, 5, 15, whatever it might be, minutes. But for each period, you're going to get 4 data points, and these are important data points. Now, what we're looking at here is we have a candle body. That's going to be the rectangular portion. It's going to be shaded either red or green. And then we have these lines above and below that are called the shadows. Now, the line above is going to give me my high point for that trading period. So wherever that top shadow goes to, that'll define the top end of the range of trading. Likewise, the bottom shadow, which is the line on the bottom, is going to define the lower end of the range of trading. Now, when we're looking at volatility, which is a very important concept when we're trading in options, when we're looking at volatility, we could get down and dirty and try to quantify volatility. I mean, we certainly could look at the VIX. We could look at some other volatility measures. But a really easy way to do this, a very efficient, very quick way to do this, is to take a look at the range between the top shadow and the bottom shadow in the candles. Now, that's going to give you a very good eyeball estimate of volatility. Now, the most important part of this is not volatility for that particular period, but rather volatility as it's related to the previous period, or what we call, or previous periods, relative volatility. Simply this: is volatility increasing or decreasing over time? That's the kind of thing that we're interested in, and there's strategies around that. Shawn is his specialty is in placing the option strategies. And Shawn, maybe if you might want to just jump in for a second, just kind of throw some color around how an option trader uses volatility from both the long and short side to help make their trading decisions.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.